Hey there, it's Trisha, and I wanted to go over a couple things from Tuesday, October 27th. We use a couple setups using a couple charts with indicators for taking our trade entry. And if you want more information on those, you can go to www.easyemintrade.com. And I will be doing another webinar in the evening on November 19th at 8 p.m. So if you want more information on that, you can go to the website as well. So this is a trade that we took at about 10:05. We had the move down that was news related at 10 o'clock, and when we had a pull back to the middle line, closed under the middle line here and took an entry just under there. We're in line here with our red line above the green line. We know we've got support below us based on this area here, and also based on when we first look at our daily chart and our 60-minute and 15-minute chart first thing in the morning, picking out areas. So we know that we've got that as our initial target. So we get in expecting to get to here. We do get to here, get our initial target. On our remaining contracts, we move to our entry and stopped out on our remaining contracts at our entry. Now I want to point out that you still have to, with the new setups for the continuation setup, you still have to be aware of support and resistance. You have to. So just because, like for example here, you get a close outside the channel and the ADX is above 20, you still are likely to hit your head in this area. This is 50% retracement, and you have a floor trader pivot midpoint right above you. So all that is right above you. So not something that you want to take expecting that you're just going to get through it. This is, as you know, especially the 50% retracement, that's an area that oftentimes is a little difficult to get through. So you just have to assume it will be here. It might not be, but you don't know that. So obviously if you take that with resistance above your head, you have a better chance obviously of being stopped out. So just know that going in. Same thing here. You get closed outside the channel here, and you've got the close from the previous day right above you. So you're above 20 here. You get in here with that right above you. So for me, I'm going to wait to get through those areas and then look to enter. Again, totally up to you how you want to do something like that, but I just want to point out that just because you're closing outside the upper channel doesn't mean that you're going to get through that area very easily. Here, same thing. We've got a resistance area above our head, and you can see that this is an area that we picked out first thing in the morning before we started to trade. And if you look here to the chart on the left, you'll see pre-market, you've got that area is where you keep coming up to. So you have to assume that you're going to come up to it again. You don't know that you're going to be able to get right through it. That coupled with the fact that that's an area that we picked out, based on previous price action on previous days, you just have to be aware of it. So again, if you wanted to take it, you might have gotten 3/4 of a point out of it, expecting that you would hopefully get up to the floor trader pivot point, but you have to know where support and resistance is, even though you're closing outside the channel. Very important. Wanted to point that out. And this is a squeeze that we took at 122. We got closed under the low from the previous day, and we didn't have anything setting up on our Keltner setup, and we had this setting up, and everything's in line to take it. Let's see where we're at here. You can see we're closed below our moving average. We're in line here. We're in line here, so we're good to go. So you enter knowing that this is a support area, based on previous price action in the morning. You can see it very clearly there. Also, we had picked out that area as an area where we are likely to stall. So you get in that trade expecting that that's where your target is going to be. So you have to know that, and then once you get your initial target, or however you want to manage it, you just have to know again where support and resistance is, especially on a day like yesterday on Tuesday. It's pretty sloppy, and you could have used your Keltner channel to take range trade, but the problem is that you're trading around so much junk, like previous price action. You've got the low from the previous day, you've got support at 50%, retracement, so it makes it difficult. So, basically all you could do if you wanted to scalp and take something as an aggressive entry expecting to get up to the middle line. Again, there's not a lot of room there, so it would be up to you to decide if that's something that you want to do. Just take a scalp at the lower channel expecting to get up to the middle channel. Just looking at the longer tick chart, you can see it was pretty sloppy. So again, up to you what your risk tolerance is. So I hope that helps, and we will see you later.